What up guys, welcome back to my channel. I hope you're all doing well. First of all, I want to say thank you very much for all supporting my channel. Just hit 2,000 subscribers. The live streams are doing amazing and we're really smashing the London streams. And yeah, hopefully a lot more content to come. But let's get this right into the video. And the thing we'll talk about today is one of my members has sent me an email from one of the big funding programs about an email you get after you've passed all the phases, and some quite important information, some statistical information that is actually really important, which I thought I could show you guys, and it kind of gives a good perspective on your trading, and if you're doing certain things wrong, the probabilities of success are stacking against you. So I really want to go through them, and it's going to be quite a short and simple video, but it's very important, so listen carefully and yeah, you'll learn a lot of stuff. So let's get into the video guys. And yeah, smash the like button, subscribe button if you haven't already, and let's get into it. So here we go there guys, I've got the email up over here and let's get stuck into it. So got me all sorted over here, beautiful. So yeah, this is the email that someone put into the chat, and it's quite interesting. So this is after you have passed the phase 2 of the My Forex fund is the company, and this is the email you get after, but it's just kind of showing you how good you've been, etc, etc. So let's just go through each point at this from start to finish and just get a little good insight into this. So the best funded traders risk no more than 1% per trade and have a one-to-one or higher R to R. So that's basically, you know, they don't over risk on per trades, especially with funded accounts. Like, you know me, I normally use like 1.4% on my own account, but definitely with the funded I would be using 1%. I feel if you do it any higher, it's going to hinder yourself for the maximum drawdown. So most funded companies have a maximum drawdown of around about 5% a day. So knowing that, I would keep 100% sure, 100% at the time, around about 1% per trade. So normally my stops are at 10 pips. So yeah, you know, you can do the maths for that. And they have a 1-to-1 or higher. So the R to R, so risk to reward ratio, is 1-to-1 or higher. So 1-to-1 is perfectly fine. This is what I preach all the time. You can have a great 1-to-1 R to R as long as your probability is very high. My R to R right now is around about 1-to-1 to 1-to-2, sometimes 1-to-3, but my win rate is around about 80 to 90%. This is why it's a lot easier for me to have smaller R to Rs, but beautiful. So knowing this and going into funded accounts, if you're trying to pass them, you need to know that, you know, risking 1% is probably very sufficient, because they said the best funded traders, meaning the most profitable, use about 1% per risk per trade. Sorry. The second comment, 3% of funded traders lose their money in the first month due to poor risk management. Wow. So the 3% of all the people lose it just because of bad risk management, meaning they just can't be they can't keep to a set amount of drawdown in the day. They just over risk and they lose their whole account. So 10% is normally what they lose, and they've lost that in the first month, which is pretty mad. So yeah, it's just showing poor risk management. Risk management, we know, is a very key aspect of trading. You have to be able to manage your trades properly. You can't be still dragging stop losses hoping it'll go back up. You need a set rule and a set kind of strategy to do this, and to cut losses off. For example, if you're in a sell and you get a 50-minute closing bullish against you, potentially you could take some positions off there, etc. There's lots of different ways. Go on my Instagram, on my YouTube, for the ways to manage risk. So that's quite a simple one. I think everyone knows that. You know, you have to just be able to manage your trades accordingly. You can't just hold them on all the time. You have to always keep on managing your trade as it's going on. Number 3, 99% of traders who trade highly leveraged crypto do not reach funded status due to volatility and high trade size. So that is a huge one. That's a big probability. 99% of traders who trade highly leveraged crypto do not reach funded. So what does this tell you? Don't trade crypto. Don't trade crypto. Facts. It's literally just giving you one of the biggest statistics you ever need to know if you don't want to do anything. 99%. So if 100 people did it, one person passed. Okay. They don't get past the phase. Very, very interesting. So yeah, don't do crypto. No matter how much it looks good and all big gains, clearly people can't trade it, and that's why 99% of people fail. Very, very simple. So, going from this already, you've given a lot of information. 99% of people don't trade crypto. Lose money if they trade crypto. They lose money if they do really bad risk management, and they have a 1% per risk on trades, nothing any higher. So they don't over leverage. Number four. Now, number four for me is the biggest one. Okay, the biggest one that I really want to focus on today. Very, very interesting. So, the traders who have remained funded in their second month, okay, without breaching the rules, have no more than 3% daily drawdown on any given day. Sometimes no trade is a good trade. This statistic, this sentence is absolute gold, okay? So, this is talking about traders who got to the second stage. So they've already got 8%. I think you have to get 8% for the first month. They're on the second, so they've already done that. They're on the second one, nearly about to get their funded account. All they need is about 4%, I think. So the traders who have remained funded in their second month, so they've passed already that, without breaching the rules, have no more than 3% daily drawdown. That is a huge statement. So no one, not one person who's in the second stage and who's past the first stage has more than a 3% daily drawdown. That is a huge statistic, okay? So in a trade at a prop firm, you always have a 5% maximum drawdown, okay? But this statistic is showing you if you go anything more than 3% in a day, the probabilities are stacked against you. There is a 0% in their data they've collected that you're going to pass this phase 2. So knowing this, my God, it's quite simple now. So you know that you're risking 1% per trade. So if you take 3 losing trades in a day, and if you don't manage them, I always manage mine, but if you don't anyway, you just have the full stop loss. You should only take 3 losses maximum in a day, okay? To be ticking this first one here, and this fourth one here, you have to be taking 3 losses in the day. That's a maximum worst case scenario, and you'll be hitting 3%, and then you should take that day off. So this is such a massive statistic, and you guys need to hear this. So if you've taken your 3rd losing trade of the day and you're pissed off and you want to make it back, and you're like, oh well, I've got 2% left in my drawdown, maybe I can use it. For the love of God, please do not. You've got this statistic showing you if you get anything more than 3%, you're goosed. They've got data. Thousands of people do my Forex fund. They have a big client base. They've got good statistics. So that takes on the chin. This is why I say to people, if you take 2 losing trades in a day, that's 2% if you don't manage risk. I'd call it a day and move to the next day. And this is why they've just put in comments. Sometimes no trade is a good day. That happens to me all the time. This week I had 7 trades, 5 wins, 1 loss, 1 break even. The last day I didn't trade. I think I did another day I didn't trade, so I only trade 3 days out of the 5. And that's what you've got to do, man. You look for the key opportunities in certain days. There's no point having to trade every single day. If there's no options, there's no options. So that is a huge statistic, and you need to really think about that. So when you're going into a funded account that you're trying to really better yourself, you need to stick to these rules, because they've got all your data. They've got all your data showing that if you don't do this stuff, you're not getting funded. Okay. This one says no more than 3% daily drawdown. No one passed it if you got any higher than that. So even though you do have 5% drawdown on prop firms, you clearly don't care about that. It should really be 3, because you're not going to make any more money if you exceed the 3%. So very, very interesting. And 5, the most profitable traders in percentage return do not take more than 5 trades in a given day. There we go. Exactly. The most profitable traders in percentage return do not do more than 5 trades a day. And that's exactly what I preach all the time. My maximum is probably 4, or mainly maximum is 3. Most of my days 2. Only if there's really, really good options. But look at that. Very, very simple. So from this is what I basically teach all the time. Don't over leverage, don't over risk. take highly profitable trades, probable setups in a day. Don't take too many trades. Don't over risk and go into revenge trading and to high drawdown in the day, which is the 3% rule. It's showing you critical information that most of our most YouTube traders, when we're on streams, tell you about. And the reason why we tell you is because it's so important. There's evidence here. So that's what you really need to be focused on for sure. So they're really, really interesting. I'm just going to bring up my my terminal, just showing you for this week kind of an example of how this kind of starts over here. So let me so this is my small account, which basically I do all my trades on, and then I use social trader tools to copy them over. So let me just get this over here. Okay, so what I'm going to do, where is it? Get my toolbox, and what we're going to do is just look for the last week. Okay, so where is it over here? Custom. There you go. Right, so custom. I'm going to do last week. So started on the 6th. Okay, so just the week just gone. Okay, now it's the weekend. So I'm just going to go through some trades over here. So this is the small account which I put to my big account, but it just means I don't have to look at them. So look over here. So you can see that the first thing that comes to mind over here, this is a full day, this is a full week, sorry, this is 5 days. Can I not just extend this? Yeah, I can. Okay, beautiful. There we go. So the first thing you can see, the quantity of trades. How many trades have I taken? 1, 2, 3, 4, 5, 6, 7. I've taken 7 trades, okay? So the first email thing here, I've ticked, haven't I? I clearly haven't taken 5 in a day. You can tell over here, look at the dates. I took 3 in a day. But yeah, didn't take 5. So the first thing is that. The second thing, my biggest daily drawdown was the first day, where I took let's take a look over here. I took a 8 pip loss or 7 pip loss. Okay, I took a 7 pip loss on a GJ trade. And then I called it a day because I already taken the loss. If I want to take the second trade, a second trade in the day when I've already taken a loss, I want it to be a very, very highly profitable setup. And if that doesn't happen, then I'll leave the day. And you can see this was actually an NY session. There was no trade on London session, so I just called it a day. Came back the next day. Came back the next day, took 3 trades. All profitable. This third one here was a break-even trade, even though it went to around about 6 pips, but couldn't continue. But you can see here, I'm happily going to be taking trades in profit. This one had no drawdown. This one had no drawdown. Very, very simple trades, all GJ. And then, yeah, this one hit 6 pips, but then came to my break-even. Called it a day. Beautiful. And also, just to clarify, oh shit, sorry guys, you can't see this. 1 second, let me move my face. Another thing, this third trade here on that day, I put my stop loss to break even at around about 4 to 5 pips, okay, which is quite short for me. Normally it's around about 6 to 7, but because it was my third trade and it was going well, I didn't want it to come back into drawdown. It's just a rule I have. My third trade, I've already taken 2 beautiful winners over here. I want to relax on this third trade, and if it runs to TP, great. If not, it was a good option. I think it was kind of counter trend as well, so I was kind of a bit scared for that as well. But yeah. Then GA the next day, this actually ran to full 10 pips. My only issue was my magic keys did not set up to close custom as 80%. It was actually closed custom at 20%, so that's why I only closed a tiny bit, and then it hit my break even, which I thought was the runner, but it wasn't anyway. So there was a win again, which all my group got. Very, very simple. No drawdown as well. Very, very simple. And then we got a lovely GJ sell later on at NY session. It's around 23 pips with like a 9 pip stop, and then we finally got a GJ trade. So you can see here the consistency of the rules that we've just looked on here is what I did. I didn't over leverage. So this is on my small account, but on my big account it's around about 1.2%, 1.3% I'm risking. So didn't really over leverage. My one-to-ones are better. So if you look at all my stop losses, especially like this one here, my stop loss for this one was, let's take a look. So I got it for sorry, so it shows my stop loss at break even here, but I think my stop loss for my last one here was around about 7 pips, 6 pips at the end, and I gained 10 to 12. So 1 to 2 risk to reward, which is good for this R to R. And my risk management is on fleek. You can look at them in my YouTube. But yeah, really, really important. I hope you guys enjoyed this. A very, very simple video explaining how important these statistics are, and they're so important. It's literally giving you data showing you if you're going to pass or not. just from plain data from everyone else doing the funds. So if you are going to get funded, make sure to do the research, get ready with your strategy and your plan. Make sure you stay within these rules, because if you don't follow these rules, you're pretty much goosed, aren't you? So I hope you guys enjoyed this video, and yeah, make sure to like and subscribe if you learned a lot. And yeah, I'll see you guys next week on the live stream. So peace out, guys. Thank you very much.